Hello and welcome to Musings by Amit Patel. Most startup entrepreneurs are desperately looking for an investment, but Bhavish Aggarwal of Ola, the co-founder of Ola, declined a $1.1 billion investment into Ola by a company called SoftBank. Now, what kind of an entrepreneur would do that? I go to a lot of startup events and there I meet a lot of entrepreneurs. And one concern every entrepreneur has is from where can he get the right investment? And here, the co founder of Ola is declining a $1.1 billion investment. So the question is, why did Bhavish Aggarwal decline this? We will look into this story in this business adventure series on my channel Musings by Amit Patel. Coming back to why did Bhavish Aggarwal, the co-founder of Ola, reject a $1.1 billion investment? Before we can answer that question, we have to understand the journey of Ola so far. Now, Ola was founded in the year 2010, in December 2010. This was exactly 20 months after Uber was found. Uber was found in March of 2009. Now, both these companies are called mobility aggregators. What do? They help you to book a car so that you can go from point A to point B. Now, both of these companies are rivals, but when they started, Uber was in US and Ola was in India. So they were not crossing any path as such. Uber was growing within the US and Ola was growing in India. In 2011, Ola got a boost from two investors, Tiger Global and Matrix Partners. From 2011 to 2014, Ola kept on launching its services in different cities within India. And in 2014, they had already created this hype around ride sharing business in India. So, in that same year, 2014, Ola also bought a startup for $200 million called Taxis for Hire. And that was just so that it could close down that startup and so that there was no other competition in India. But then at some point, Uber was launched in India. So it became a rival to Ola, or Ola was a rival to Uber within India. But being an Indian company, what Ola did was Ola started including auto rickshaws, which were also a part of most cities in India, on its ride sharing business. So this catapulted the success of Ola, and Ola became a $1 billion entity, an entity which was big enough to give a tough competition to Uber. In 2016, Ola got another big boost. It got a $1.1 billion from two investors. One was the Chinese giant Tencent, and another was the famous Japanese bank SoftBank. Now, SoftBank is not actually a bank, it is an investor into software companies. But both these are big companies and they invested in Ola, taking Ola to the next level of success. Now, with all the investment that was coming in, with all the growth that was happening with Ola, Ola started expanding its services to other countries like Australia, United Kingdom, and New Zealand. It also started buying other startups. For example, it invested in Vogo. It is a scooter based rental service. It bought Riddler. So it started buying all these different entities to grow its business. Okay. But it is not just a smooth ride that Ola was having. There were challenges that Ola was always looking for some investment. Ola was always facing the crunch in the required capital. So Ola again decided to raise another $1 billion of capital. If it can get this $1 billion of capital, then it would take the valuation of Ola to a $6 billion company. When Ola disclose this, the first investor to invest in 2000, in the beginning of 2019, was Sachin Bansal. Sachin Bansal is a co-founder of Flipkart who got a big amount of money from the Walmart sale that happened. And Sachin Bansal invested about $92 million in Ola. Sachin Bansal has a very important thing to say about Ola, and I'm going to read it out for you about here. So Sachin Bansal stated that Ola is one of the India's most promising consumer business. On one hand, they have emerged as a global force in the mobility space, and on another hand, they continue to build deeper and deeper operations in the Indian subcontinent, becoming a trusted household name today. Now, the funding, as I mentioned earlier, that this funding round, it's called the J series funding round, is expected to take Ola's valuation to over $6 billion. So why, again, if Ola is looking for funding, why did Ola reject a $1 billion investment? For that, you have to understand the journey of Uber. During this time that Ola was growing from 2010 to 2000 to this point, Uber launched its mobility services in 2013 in India. Now you have to understand that Uber was already the largest mobility company in the world. So Uber is already like a 70 to $80 billion company, and recently Uber announced that it is going to go for an IPO which will take Uber's valuation to a $120 billion company. Now you have to understand that Uber is looking at a $120 billion company, and its rival Ola within India is a $6 billion company. It is like a David and Goliath scene. But that is where the roads of Uber and Ola cross. So SoftBank is also an investor in Uber, and SoftBank is also an investor in Ola. So when SoftBank gave a proposal to Ola that we are going to invest $1.1 billion in your company, Bhavish Aggarwal felt that he was going to lose control of the company. You know what happened when Ola bought taxis for hire? They bought taxis for hire for a $200 million, and then they closed down that business just so that they could become the number one company within India in the mobility space. And that is exactly what Uber is looking at. Uber wants to buy Ola through SoftBank and wants to close down Ola. That is the fear that is driving Bhavish Aggarwal. That is the reason he is declining the $1.1 billion investment. I asked you a question, okay? And in the comments, let me know what kind of an entrepreneur is going to reject an investment of $1.1 billion. Well, the entrepreneur who loves his company and wants to control or wants a controlling stake within the company will try everything possible to avoid any other company from acquiring it. There are so many stories. There is a story about a diaper company which was acquired by Amazon and then closed down. I just now told you a story about taxis for hire, which was taken over by Ola and then closed down. There are thousands of companies like this where the number one player in the market will buy the number two player and then close it down, merge the business, or do whatever is required so that they do not have any close competition in the business. And that is exactly what Bhavish Aggarwal has done by avoiding this investment of $1.1 billion. You know Mohandas Pai, the chairman of Infosys? He sums it up really well for every entrepreneur. He said, founders become employees when someone sits on your board and tells you how to run the show. Do you remember Steve Jobs? Steve Jobs was removed from his own company, Apple Computers, which he had built himself from scratch, when the board of Apple thought that Steve Jobs was not doing the right thing. And he had to leave the company, and he stayed out of Apple Computers for many years, about 10 to 14 years, before he was brought back into Apple. From this story, I just want to pass this message to every startup entrepreneur that before you take a single dollar of investment for your company which you have started from scratch, ask these two very important questions. The first question is, what is the value of my company? It is very important to understand what is your company valued at. What you have to really do a deep study of your company, the market which it serves, and see where your company is at this point, depending on the sales that are happening, depending on the type of business that you are doing, that what is the value of your company. Okay, whether it's a $1 million company, whether it's a $10,000 company, whether it's a $2 billion company, it does not matter what the value is, but knowing that value is going to help you. And the second most important question to ask before you accept any investment is to ask how much stake I am diluting in my own company. Are you within the controlling stake of your company, or are you going to lose your company in case the board feels that you are no longer required for this company? And this is a very important decision to make. I'm not saying that you cannot sell your company. Yes, there are entrepreneurs who come out and they really want to sell their company. They are done with whatever adventure they had with their company, and now they just want to sell off that business. They have grown the business to a level, they are bored of taking it further, and they want to sell it to the right suitor who can take it to the next level. And that is fine if you want to completely come out of that business. But if you are still passionate about your business, if you are still want to be in controlling stake within your company, then you have to make a decision of what you can dilute in your company. So as a startup entrepreneur, it is a very important question to ask, what is the value of my company, and how much value am I ready to dilute safely so that I can remain in control? These two questions are very important questions for any startup entrepreneur. I hope you like this stories in my business adventure series on this channel, Musings by Amit Patel. Let me know in comments whether you like this story and what part of the story you liked the most, and give it a thumbs up. Tell me if you want to listen to more of such stories on this channel, Musings by Amit Patel. Musings by Amit Patel brings you a collection of unique perspective about our career and business. Above all, it is a presentation of ideas combined with experience and philosophy so that you can create an impact in the world around you. My biggest pleasure will be when my thoughts on this channel will help you, inspire you, motivate you in the same way as they have done for me in my own career and my business. Subscribe to this channel and share this video with your friends and family who are into business and who want to build an unstoppable business. Stay focused, stay rich. Thank you. Keep coming back for more.